Hey everyone, and welcome to another deep dive. Today, we're heading to India. We're going to unpack some potentially big changes in their securities market, all centered around sustainable finance.
That's right, and these are developments that investors everywhere are going to want to be aware of.
Absolutely, especially because when it comes to sustainable finance, things are moving fast. So let's dive into this a little bit. What exactly are we looking at today?
Well, the big news is this recent consultation paper from India's equivalent of the U.S. Securities and Exchange Commission. They're called the Securities and Exchange Board of India, or SEBI for short.
Okay, so SEBI's kind of a big deal over there.
Definitely. They're proposing some really interesting updates to how sustainable finance works in India, and the impacts could be felt far beyond their borders.
So, India, sustainable finance. Why should our listener in, say, London or New York care about this?
Because India's market is massive, and it's growing incredibly fast. But it's more than just the size. This is about how we finance a more sustainable future for everyone globally. Remember the UN's 2030 Agenda for Sustainable Development.
Oh, absolutely. Those ambitious goals, tackling climate change, ending poverty, they require a ton of money to be successful.
Trillions, in fact. And that's where bond markets come in. They're uniquely positioned to help bridge this financing gap. They provide the long-term capital these projects need to really take off.
I see. So, bond markets as a vehicle for driving these huge, impactful projects.
Exactly.
Mm.
And India seems to recognize this because back in 2017, SEBI established a framework specifically for green debt securities, and they've been refining it ever since.
Now, we're not just talking your typical green bonds here, right? This seems much broader.
You're right, it's not just a single shade of green anymore. We're talking blue bonds for things like clean water and marine conservation, yellow bonds specifically for solar energy projects.
Right. And then there are transition bonds designed to help those companies who are shifting to more sustainable business practices. It's like we're building a more sustainable future, one bond at a time.
I like that. Now, many of these bonds fall under the category of use of proceeds bonds. That just means the money raised is earmarked for specific projects with clear environmental benefits. But there's another category, key performance indicator bonds, or KPI bonds.
Okay, so use of proceeds seems pretty straightforward, but what are these KPI bonds and how are they different?
Sure. With KPI bonds, the financing isn't tied to a specific project, but rather to a company's overall sustainability performance. So it's more about incentivizing companies to improve their broader ESG performance.
Huh, ESG. And just as a quick reminder for our listener, ESG stands for environmental, social, and governance. It's basically a way to evaluate a company's performance beyond just the financial bottom line.
Exactly. It takes into account their environmental impact, social responsibility, and how well they govern themselves.
So SEBI is looking at both a company's environmental impact and its overall behavior with these bonds.
Precisely. And this is where SEBI's proposed changes get even more interesting. They're aiming to significantly broaden the scope of sustainable finance by introducing new frameworks for social and sustainability-linked bonds.
This sounds like a major shift. What's driving this move by SEBI, and what kind of impact could these changes have both in India and globally?
That's a fantastic question. There are a few key factors to consider, and they really get to the heart of why we're taking this deep dive today. Understanding these factors can unlock a much deeper understanding of this evolving landscape.
Well, don't leave us hanging. Break it down for us. What are these key factors driving SEBI's decision-making?
Well, first, we need to consider the huge global push towards sustainable investing.
So are you saying there's this global surge in sustainable investing and India is trying to get ahead of the curve?
Exactly. Investors are becoming more and more interested in aligning their money with their values, and that's creating a big opportunity for countries like India who are promoting sustainable finance.
It's like they're saying, hey, world, want to make a difference and maybe earn a return while you're at it? Come invest in India's green future.
That's a great way to put it. And this actually connects with the second factor, which is attracting foreign investment. India has set some very ambitious goals for sustainable development, but those require some serious capital. By building this robust and transparent sustainable finance market, they're hoping to attract foreign investors looking for those opportunities.
Okay, so it's about creating that positive feedback loop, right? Attracting investment to support sustainability, which then makes India even more appealing for ESG-focused investors.
You got it. And this leads right into the third factor, which is all about India establishing itself as a leader in the global market.
Interesting. So by pioneering these innovative frameworks for sustainable finance, they can set a precedent for other emerging markets to follow.
Exactly. They're positioning themselves as a model for others to learn from.
Okay, I'm starting to get a much clearer picture of what's going on here. India is making a real play to become a dominant force in sustainable finance. But I'm still curious, how are they actually going about it? What are these new frameworks and what makes them so unique?
Let's start with social bonds. These are designed to tackle some of those pressing social issues we see, things like making sure everyone has access to affordable housing, improving healthcare, and making quality education available to all.
So investors who buy social bonds are directly contributing to positive change within India.
Yes, exactly. Now, you remember those KPI bonds we talked about before, the ones linked to a company's ESG performance? Well, that's where sustainability-linked bonds, or SLBs, come in.
Right, the KPI bond. So how do SLBs tie into all of this?
Well, they're a key element in these proposed changes from SEBI. With SLBs, you're essentially incentivizing companies to improve their overall ESG performance.
This is where things get interesting, right? Because now investors have a way to hold those companies accountable for their ESG commitments.
Precisely. Imagine a company issues a bond where the interest rate they pay is directly tied to their progress on reducing their emissions. Or maybe it's tied to achieving better gender diversity in their workforce. If they hit those targets, fantastic. But if they don't, well, there might be financial consequences.
So there's real incentive for these companies to step up and make those changes. That's a game changer. But with all these different types of bonds, green bonds, blue bonds, social bonds, and now SLBs, how can an investor be sure these instruments are actually legitimate and not just a case of greenwashing?
That's the million-dollar question, and it leads us to one of the most critical aspects of SEBI's proposal.
Okay, so no greenwashing allowed. What's the plan for ensuring these new bonds have some teeth?
Well, SEBI is proposing a two-pronged approach: alignment with those globally recognized standards and then independent verification. They're not trying to reinvent the wheel here. They're looking at established best practices.
So they're taking cues from things like the green bond principles and the climate bond standard to make sure these new bonds meet those international benchmarks for credibility.
Yes, precisely. This shows a real commitment to transparency and best practices, which is key for drawing in those international investors. But it's not just about aligning with what's already out there. They're also proposing that anyone issuing these new ESG debt securities, that's what they're calling them collectively, has to engage independent reviewers or certifiers.
So it's not enough to just slap an ESG label on a bond and call it a day. There's actual oversight involved.
Absolutely. This independent assessment adds a really crucial layer of accountability. It's about making sure that the money raised is used for its intended purpose and that those companies are actually hitting their stated ESG targets.
This is starting to feel like a win-win-win situation. Investors get to put their money into projects that match their values, companies gain access to capital that rewards them for sustainable practices, and India gets to move closer to achieving those ambitious sustainable development goals.
You've hit the nail on the head. It's all about collaboratively building a more sustainable and equitable future, and that's something we can all get behind, right?
I wholeheartedly agree. But before we wrap up, I think we need to touch on one more fascinating piece of SEBI's proposal: these sustainable securitized debt instruments. Can you break that down for us? It sounds a little intimidating.
It's actually fairly straightforward once you wrap your head around the idea of securitization. Imagine a bunch of loans that have been made for various sustainability projects, financing solar panel installations, or maybe it's building those energy-efficient, affordable homes we talked about. Now, picture all those loans bundled together, and then bonds are created that are backed by those loans. That's the essence of sustainable securitized debt instruments.
So it's almost like taking a whole bunch of eco-friendly loans, dividing them into smaller pieces, and then offering those pieces up to investors.
Exactly. This approach allows investors to support a diverse range of sustainable projects and potentially earn a return while knowing they're contributing to that greener future.
This is all really incredible stuff. It sounds like India is really pulling out all the stops to become a global leader in this space.
They are, and you know what's even more interesting? This isn't set in stone yet. SEBI is actively looking for feedback on these proposals. So this is where you, our listeners, come in. Your thoughts, your perspectives, they can actually help shape the future of sustainable finance in India and maybe even beyond.
That's right. We've given you the rundown on ESG debt securities and sustainable finance in India, but we want to hear what you think. What are your thoughts on SEBI's proposed changes? Do you see any unique opportunities here or maybe some potential challenges? Head over to our website or find us on social media and share your thoughts. We really value your insights.
And with that, we'll wrap up this deep dive. Until next time, keep learning, keep asking questions, and keep exploring the fascinating world around us.